Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, September 6, 2022. Obviously, markets were closed yesterday in observance of Labor Day, and we're about an hour into trading. It's 10:30 a.m. As I'm starting the video, so I just want to do a brief update. I fired off charts. I know over the years I've gotten a lot of feedback that, especially in the morning, you like to see those static charts. Easier to read than listen to a video, but I figured I'd follow up with a video and share my thoughts. Now, um, believe me, this, as I said, this thing could break either way, and I know that's a given at any time. The market can go up, the market can do down. I'm not doing that. I gave you clearly my thoughts, how I'm positioned. I'm betting on a little false breakdown here. Again, the future's breaking down though, but we do have, as I said in that post, SPY, the S&P 500, holding support, and that's a big one. A lot of traders, a lot of institutions look at the S&P 500, and they're going to look at the, especially during market hours, the actual index. Remember, futures are not always, the futures are not priced exactly to the spot S&P 500 index. There's a differential. The futures are just that, where people are betting where something's going to be in the future. So the spot price of the S&P 500 or SPY is not always going to mesh perfectly with the futures. So let me just go over the charts quickly. So that's it. It's say what you want. I know it's September, and that's everybody, and they talk about how bearish Septembers can be historically, and and I get all that, and the VIX is moving up and all that good stuff. But it's kind of in my nature. When I see these 60-minute divergences and an index falling to support, despite how bearish the price action has been, it's hard for me to jump in and join the herd. So I told you I'm staying long. I actually increased long exposure. I feel good about that. When you come into a day like today and you're down 1% in the NASDAQ 100, and at that point, right about the time I got the video off to you guys, it's do or die time. So, I keep a relatively tight stop. If the bottom falls out of the market, big deal. I'll flip out, get out of the shorts, or start scaling in. I'm sorry, let me back up. Get out of those longs, and or start scaling into shorts at that point in time. So that's why, despite us breaking support today on the futures, which I'll get to in a second, I've kind of decided to shrug that off. I told you I'm not a mechanical trader. Mechanical traders take breakouts on face value, take breaks of support or resistance on face value, and don't try to second guess and dismiss what they're seeing in the charts. I do that. I try to anticipate which breakouts are going to fail and which ones are going to hold. So we'll see. I'll be right or wrong, but probably by the time you get this darn video and start watching it, I got to finish it and upload it. Won't be long. That's it. So I just want to point out SPY still at support with positive divergences. This trend indicator just flirting with that bullish and bearish line at 0.0071. So we'll see what happens. And again, by the time you get the video, you'll probably know. If it breaks support, my next support on SPY that I have here on the 60-minute chart is all the way down here at about 381.80. So, and then more importantly, you'll have taken out the uptrend lines. It's going to ugly up the daily charts, and in my opinion, it's going to increase the odds that we'll continue on down lower and work our way down to my fourth and final, what I called initial bear market targets on the weekly chart. That's T4 on QQQ. You can reference that later if I don't get to it here. All right, let me get to the other ones. There's NQ, NASDAQ 100 futures. Remember, I had a primary trend line off the mid-June lows right there, which was already taken out. And then I had an alternative trend line that came off the late June lows. That's the yellow trend line, my BOD trend line. Even that one was taken out today. So sell signal 1, sell signal 2, you would think it would be an all-in short moment, and hey, it may be. If we don't recover it soon, it's going to be, in my opinion. However, like I said, we've got these divergences, and quite often some of the biggest rallies, even in bear markets, come off these 60-minute divergent lows, just like this one did. Just like I pointed out there, one of, not the only reason, but one reason I covered all shorts, posted covered all shorts and starting to go into longs, and that was also a hit of T3 on the weekly chart. So I love to see really positive divergence on that 60-minute time frame with the markets falling to a key support level. In this case, it's not exactly that. In fact, the opposite. We took out key support, But again, if we can flip through it, it's going to be a very powerful bear trap. I think you're going to, I have no doubt, let me just say that, no doubt that this move today, this drop after yesterday's big reversal on Friday, and this follow through drop today, sucked in a lot of shorts. And they're either going to make some money or they're going to get squeezed out. And if they get squeezed out, there is nothing more beautiful in trading than being long during a short squeeze. So, like I said, the odds might not be the best in my favor because we're still below that trend line. But if we recover, it could be pretty powerful. And you guys saw my arrows I'm drawing. Still maintaining the targets I was last week for the bounce when we fell to those trend lines, which is that down trend line off the highs right there, and then some of the price resistance levels. So we'll see. So far, look, we're starting to get there. Actually, as I started the video, we're climbing back a little bit, we're back testing that trend line now from below. Let me get to ES real quick, just so I can wrap this up and get it out to you. Again, you already should have received the static charts, screenshots, but I've got it here somewhere. Bear with me. NQ, I'm looking down on my charts here. ES, there it is. Wow. Gosh, I didn't even know that. Let me zoom in a little tighter. So ES, remember, there's our primary trend line. That's why, even though I'm an NQ trader primarily, I do trade ES at times and I trade RTY, but I'll always look at the S&P 500 because if the traders are buying the S&P, big institutions, other traders, and they start throwing in buy orders and they run up the S&P, it's going to reverse the NASDAQ because they have the same top components. The NASDAQ's just a little more top heavy in them, but so there it is. So there's our breakdown, which if we can build on this a little more, then it'll be a fake down. I love bear traps, love being long if they play out. So that's it. Still strong, positive, bullish divergences. And then again, I'm going to zoom in a little tighter so you can see that trend line. There it is. We took it out this morning. That's right when I got the post out to you. We were down there, and now look, we look like we're above it. And there's a whole confluence of trades over the last few days right here. If we can pop that level, it should be good night bears, in my opinion. And if we can't, and we go down, and we take out today's lows, good night bulls. So play it either way. And like I said, just be flexible. That's the thing. I don't have a crystal ball. All I can use is both the charts and my intuition and experience. And then the only guarantee I've ever given anybody on this site is I'm going to be wrong, and I'm going to be wrong a lot. So that's about the only guarantee in the markets there are. And you just got to take your shots. And then, like I said, when have a trading plan, you can be flexible. If a lot of evidence presents itself, you can modify that trading plan. But otherwise, stick with it and don't get married to any one position or any one bias that the market must do this, market must do that. I'm going to add a level here, by the way, for you. Right there, I have a 39.75. That would help to pop if we reverse. But even if we get that far, then at that point it will clearly have been a bear trap. Right now, it's just a back test of the trend line. So this is it. As I'm doing the video, do or die time. You're going to get this video shortly. I'm going to wrap it up, and we're either going to have gotten rejected there, bears win, or we'll have recovered the level. And if we recover it, like I said, each and every reaction high you pop will bring in additional short covering if that happens, because that's where logically the stops are placed. If you short the trend line break, you want to stop above it, a tight stop, that is. Some people use more liberal stops, and there's a big level right there. There's a target. We probably run up too quickly, 40.13. That would turn us solidly green for the day if we get there. And then again, downside targets. Let me just go to that. I'm spending too much time probably on what I think might happen. And again, my convictions aren't super high. Don't get me wrong. It's just how I'm trading it right now. But here's the weekly chart, and nothing's changed there. This is 1, 2, 3, and we're starting out the 4th week in a row of just nothing but red sticks. This is indicative of bear market action. Got you out of the longs there, or I got out of mine and got short and grabbed almost all of that so far, most of that. I've reversed a little bit early, but still think we'll bounce. And I don't think this is coming right now. I think this comes later. I think too many are bearish right now, and all that buzz about September being a bad month and blah, 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 blah. But again, it's also technical. But that's it. I'm not going to miss out. I'll tell you that. I will not ride that down long or miss out on it short. We'll know today. I'll do a follow-up at the end of the day. So you guys know the levels. Let's not beat a dead horse here. Let's get again. S&P 500. I already showed you at trendline support. QQQ below the primary trend line, which I have here on this 60-minute chart. There's my alternative trend line right here off that late June low. Even that one on QQQ is taken out, and NQ. But if we gain those back, it's going to be powerful. So. For you small cap traders, RTY, the Russell 2000 futures, still above its primary uptrend line off the lows, still diverging. This is all I do is extend these divergence lines. So, and that's still the same target. That uptrend line in the 1904 level. Should we hold here? So. That's it. Those are your levels to watch. And like I said, I'll do another video today. We'll see where this goes. It's going to be an interesting day. Like I said, I'm suspecting either a big green close, and that'll be a nice, especially considered how far down we were. Well over 1% drop so far in the NASDAQ 100. If we close green, that's a heck of a reversal. And otherwise, we close big red down. Big red probably 3% or more if these breakdowns stick. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Good luck.